So I'm Steve Salis, founder and CEO of Salis Holdings, which is a diversified holding and investment management company based in Washington, D.C. We own an array of operating companies spanning in multiple verticals of business, restaurants, retail, et cetera, et cetera, et cetera. With regards to Sizzle Acquisition Corp, Sizzle is a blank check company by where we just effectuated an IPO on last Thursday, which was, I think, November the 3rd. And we closed officially on Monday. And so it's a $155 million SPAC, special purpose acquisition company. And we're looking to merge with a company in an array of different industries, restaurants, retail, consumer, hospitality, restaurant and food technology, as well as prop technology. So we're excited. You know, it's the markets in the SPAC sector have been very choppy. And, you know, in full candor, we pre-IPO'd in March, and we had a quiet period. And so when the quiet period was over, we were ready to make some noise. The market wasn't so great. So, you know, I have plenty of other things to keep myself occupied. So I just said, all right, we're going to take a little bit of a timeout. We can't control the market. The market's going to do what it's going to do. And so all we can do, like in anything, is just figure out how we tend to or handle what's been dealt to us. And so we paused and, you know, watched how everything was and wasn't happening, and decided that you know, now is the right time to do this. And very, very fortunate that we got out. Book was significantly oversubscribed. I think it's a testament to the team. And you know, now the real work starts. You know, you go. I say, you shut the door, or you end one race and you start another race. So this is the race that matters, and so we're going to go out and hopefully win the race.
Well, our audience, of course, is very much restaurant-oriented, restaurant technology-oriented. What are you looking at in that space that you think would be an attractive investment at this point?
Yeah, so, you know, without getting into like a ton of particulars, just because of, you know, sort of where
Right.
we're at and what I can disclose. Here's what I'll tell you. I mean, and this is all stuff that anyone could look at in the S1, but, you know, effectively we're looking for a strong brand, something that ideally is a category leader, with an enthusiastic millennial or Gen Z consumer, has an enthusiastic, excuse me, Gen Z or millennial consumer following, something that is perceived to have really strong price value correlation. I think that's very important. Good fundamentals. Ideally something that, while it may have been impacted by COVID, has maintained a plan and has a path forward. And we'll be honest, we're still not out of COVID yet, and it's materially augmented the industry in a lot of ways, which I suspect we'll talk about in a moment. One that I ideally can benefit from our team's expertise in creating, building, and monetizing on brands and products. Something that ideally is more channel segmentation. I think one of the things that is important to me and what we think about is, when you look at the industry now, you know, the days of just scaling, you know, units and defining unit count or unit volume solely on their merits, those days are over. It's a very one-dimensional mentality. That playbook has been long. Frankly, that playbook was dusty before COVID. I think COVID is only amplifying that. And then, you know, something ideally we can find that has the right dynamics from a private to public company sort of peer set, looking at its peer set publicly versus where it is privately, and creating the right sort of arbitrage that the market wants to see and our investors want to see. And, you know, perhaps could serve as a platform company. You know, you think about growth, you know, growth, whether you're private sector, public sector, growth is an important part of the business, a lot of ways to grow. Organically or strategically. And in this case, you know, we'd like to find something that could grow, you know, sort of both, you know, from both perspectives, something that can grow organically and or strategically through perhaps subsequent acquisitions or other bolt-on opportunities that may work for the brand.
Well, what about your background in restaurants makes that a potential target for the SPAC?
Yeah, so you know, I have an interesting background. I'd say, I guess any entrepreneur does, I suppose. But you know, college dropout. I'm a street guy. You know, I went to school to play basketball. I left school on a scholarship when I was 20 years old. I wanted to chart a different path. I started working in the beverage industry in Manhattan. That's where I moved from New Hampshire. I learned the ins and outs by just rolling up my sleeves and getting into the business. So beverage side first, you know, lounges and clubs and bars. Then moved into learning a lot about restaurants and hotels. I had the bug when I was 22 to open my own restaurants. I did. I sold my first business when I was 24, coming on 25. I then had the idea to start And Pizza, which I did with my co-founder, Michael. And I think the rest is kind of history there. I sold my interest in that company last year. I've built a holding company of exceptional hospitality and restaurant assets. I believe we really understand where the world is going. I think it's very unique that where I'm at in my career, I'm in my mid 30s, and I've already successfully built and exited, scaled, acquired multiple companies already. And so, I can wear a lot of hats. I can wear the hat as a founder, which I think is very important. The founder dynamic is maybe the most important when you're targeting a company that's founder-led or the founder's highly involved. I'm an entrepreneur, so I know how to be scrappy and never sort of lose line of sight of what makes being an entrepreneur important. I'm an operator. I understand what it takes to run these businesses. This isn't just, looking at a bunch of spreadsheets and, making decisions, but understanding that spreadsheets are a lagging indication of what's actually happening and getting to the root of the situations. And I'm an investor. I've invested all of my own money into really all of my deals for the most part. And so I understand how to right-size companies, build the right capital structure for the business to do what it needs to do and effectuate the strategies that it needs to put forth. And so as a result of that, I think that's all led me to, a really unique position coming out of COVID, where not only do we have the public currency in the form of the SPAC, and I view it as that. I view it as, for me, it might be a situation where ideally would want to buy something privately, but the cost of capital in the equity markets, there isn't a better place, right? I mean, the rate of return that a public company, public investor would want on a public company because of the liquidity is a significantly lower rate of return than one would want on the private side. The private side, you're going to want a much higher rate of return from an internal rate of return perspective. And so, I think that, it's a wonderful product. It's a great product for somebody who wants to leverage our team. Our team is deep with public and private company experience as operators, founder and entrepreneurs, and deep investment expertise, sort of ranging the gamut. And so you want speed to market, you want price certainty. You want our team, like I said, that can provide value. We don't need to provide more value than helping you get to a certain place, but we can also do more. Besides just being a merchant banker, we'd be an excellent choice for a company looking to for strategic alternatives.
Well, when putting together a team for a special acquisition company, what do you look for?
It's a great question. What I would tell you is I think a really good, so taking a step back to what I just said, is in my estimation, I wanted to build a team that was well-heeled, that had a lot of varying experiences, but ones that I thought could be highly applicable based on our thesis to effectuate the transaction. And so, not to be redundant, but I will for a moment. I mean, public and private company experience crucial. Ability to being founders, exiting companies, being operators, being investors, both privately and publicly, having all these various experiences. I think the makeup from a sort of a DNA perspective is really important. Based on, again, the areas by which we're going after segment-wise and what we're looking to target. In addition to that, you kind of have different levels. So you got the leadership team, you got the board of directors, you got your advisors. So one of the things that was really important to me, Aaron, was making sure that people were active. And so we have a very active board. We have an active advisory board. These are people that aren't just like window dressing on, some like deck somewhere or on an S1 to leverage the resumes. These are people that have a real concerted interest in helping and providing value. And the board is one of great significance. I mean, Karen Kelly, is the former president, chief operating officer of Sweetgreen, currently the COO of Jack's, was the president of Dry Bar, was the chief restaurant operations officer, I believe, of Panera Bread. So here's someone that has tremendous experience. It's very brand centric. Brand's important to her, like it is to me. You have Warren Thompson, who comes from another background, runs one of the largest minority contract food service businesses in the country. Has built his business up through a multitude of different acquisitions. Compass Group, the large contract company, owns half his business. So, having that access. Carolyn Tribuco on the advisory group, as an example, was the co-founder of Azul Brazilian Airlines. Carolyn, was the founder of that. And with David Nealman is the founder of JetBlue, right? So we tried to just bring a lot of varying experience we thought that would be applicable based on the areas that we're seeking. And I wanted them to be active. I wanted them to add value, because at the end of the day, as much as we know nothing. And I think everyone has a perspective, and I think that the perspective is great. We know how the decisions will get made, but I think, having a great team is the key to really anything. But in this case, specifically regarding this, is going to be really important to effectuating a deal.
Has the lens of the vaccine era, which changed considerably when you first set out with Sizzle to today, but has that lens changed at all in how you're viewing what you might invest in?
Oh, unequivocally. I kind of took a jab when I said earlier about the playbook and how it was dusty before COVID. I think there's the greatest level of incongruence today that we've ever seen on so many different levels, which makes it so exciting and challenging too, because what you're trying to figure out is, where is this all going to shake out? And the reality is, Ron, nobody knows. Okay, like no one's going to say something, and while it may make a lot of sense, and perhaps there's validity to it, and we will see because time will tell. No one really knows, how this thing's going to go down. I mean, if you think about it right now, like there's such an incongruence just in the capital markets alone. Private equity, there's an incongruence between, capital and great companies, time horizons, rates of return, strategy, all have changed. You think about where we are. We have tailwinds right now with regards to sales. However, there's been a material augmentation as to how sales are being represented now, right? In some cases, if you were full service, prior to COVID, you probably are seeing nice trajectory in that dining room. You're also seeing a pretty nice and meaningful off-premise business that may have not existed before. And then the question becomes, is that when this thing stabilizes, is that going to be additive or accretive, right? Where you're going to get real incremental, or is that going to actually make up the composition of your business? And if it makes up the composition of your business, well, you got other issues, because you have compressions as a result of profit compressions, as a result of the derivative of the sale. The sale of a delivery business is different because you got a lower margin profile, because you're divvying up dollars in different ways with the third-party providers. You got the increase in packaging and so on and so forth. So you have tailwinds in sales, if I were to say in surmise. You have headwinds with regards to expenses, right? Because on the point I just made, and then in addition to that, you got labor challenges right now. You got supply chain issues likes we've never seen before. CPI is at the highest it's ever been. I was reading today, 30-year high. So, it's all, and then you're looking at the markets, valuations are ripping in the public sector. And generally the public markets are an indication of the private sector. So it's just so fascinating to see. You have, I think, a lot of companies that still have perhaps had lifelines in light of government. There's been an overabundance of government capital put in through all the various programs, through PPP, through Restaurant Act, through EIDL. So I still think that we're in this situation, while maybe it's not as foggy, it's still foggy from the standpoint as to how is this all going to shake out at the end of the day. But I'll reiterate, I think while the fogginess creates challenge, I think it creates tremendous opportunity. So to that end, I think that what we need to be looking at is something that we believe is well heeled to support the modern constituency, the modern consumer profile, and where it's going, and meet the sort of the dynamics that is needed in order for it to hopefully be long-term sustainable and enduring. And I think in light of that, you think about technology, you think about digital, you think about multiple channels of distribution. You don't think just units, and how you scale through units. I think, unit growth used to be the way. I think it's a way. It's not the way anymore. I think it's one of many ways. And so this is all for me to say, that we're going to bring that level of thinking to any company. We bring it to our companies today, as we think about how we're scaling up. Have been prior to COVID. COVID has amplified that, like I think it has for many others. Some are going to be on the ship and others aren't. But this is how we're thinking about our business, and this is stuff that we're going to be looking at when we try to figure out, in the case of the SPAC or any company we acquire, is it going to meet those some of those thematics or elements that are going to be crucial to, again, long-term sustainable and enduring success, at least the highest propensity, right? Because there's nothing guaranteed.
Your holding company maintains an interest in a restaurant concept, correct?
Yeah, well, the holding company has an array of food interest. We have Ted's Bulletin, which is a modern American breakfast all day brand. Very excited about it. I think Modern American is great because you really can you sort of borrow inspiration globally and modernize it in an American manner. So it gives you a lot of latitude from a menu and product development perspective. I think breakfast all day is a massive point of differentiation, and the breakfast day part we do very, very well. And so the business is a 3.5 day part business model. It's like depending on the location, a 7 a.m. to a 10 or 11 or even midnight business. So you're getting an all day sort of program. And so we bought that business in late 2017. The business was a bit downtrodden. I would tell you it's probably more stress, not distress, but had wonderful attributes. Just named a couple of them. Like I said, there are others too. And now the business is totally in demand. We repositioned the asset, we rebranded it, we built a new prototype, and we're scaling that pretty significantly. You'll see more of them popping up. We also own a barbecue business called Federalist Pig, which is considered one of the top barbecue businesses in the country. It's already received 2 Bib Gourmand awards from Michelin, and so that's being scaled as well. I own an iconic indie bookstore that has a massive restaurant and bar play called Kramer Books, one of the most internationally recognized bookstores. Pretty cool brand. It's much older than I am. It's lived a lot of lives, and funny enough, that brand is interesting because when I did it, it was while I was still in the pizza business, and we were introduced through a mutual attorney, the founders of that company, me, and I actually acquired it the same age that they started the business. They were in their 70s. I bought it when I was 33, and they, it's just fascinating how progressive, how many years it's been around, 45 years, but how progressive the kit of parts were around the business, how immersive it was from the food and beverage perspective and the retail. It just had something going for it. So I bought it because I felt a great sense of stewardship as one of the most iconic retail establishments in DC. And now, since owning it for 4 years now, I mean, it's there might be a play there for it to scale up. And then we have some other things. We have Ensemble Kitchen, which is effectively a digital food hall, is the best way I would describe it. I wouldn't call it a ghost kitchen. I know ghost and cloud, and there's a lot of monikers to describe we'll call it the off-premise delivery digital sort of atmosphere. I would say this is a bit different from other things because we're actually taking a bit of a different strategy on that, where we're taking actually off the beaten path retail locations, reskinning them out, second gen, and giving a lot of ways for people to engage with that brand through delivery, through takeout, through order ahead, through contactless, through curbside pickup and the like. And so what I like about it is there's a lot of modes for which you can get product out the door. And then we produce everything there in one kitchen. And so we're leveraging some of our brands as a beta test inside that platform of Ensemble as a way to really sort of understand that business model. It's probably about 40 products. It's really well merchandised by brand and by product line. And really the idea around it was, we built a proprietary app, and the app is great because one, we believe it's seamless to order, but two, we have a proprietary technology that allows us allows our guests and the consumers to order anything they want and build one market basket. And the idea around it was, if you want different things at one time, you really can't do that through the traditional third-party delivery guys. If you and I were together and we were ordering, and you wanted pizza and I wanted breakfast, and we had DoorDash, right? And, we'd be fighting who's ordering first because only one of us could order, and we'd have to wait until we received that order, for which then we could reorder somewhere else. And I didn't find that to be really efficient. And while I grant you could go on Uber Eats and other things, not all these delivery platforms have the same products or the same brands. And so we decided that we were going to build an overlay, make it really seamless. You could order pizza, I could order my breakfast, one place, very simple, made to order, comes together, packaged under Ensemble. And I'm actually really high on that brand. I think it's gonna show really well. We're watching kind of what's happening out there. I think there's been, I view it like the pizza business from the standpoint when we started Am Pizza. There was not a lot of guys out there. I think Mod was there. There was like a Pi 5 maybe, and then there was some Top That or something like that out of Oklahoma. The next thing you know, Blaze opens and these guys open, everyone opens. And, everyone's rushing. They think it's easy to do. Now you look back and there's only a couple of players in the game. I think it's going to be the same thing with this, right? It's like a lot of FOMO going on right now. People are fearing of missing out. They want to throw dough at this. And I think everyone's trying to figure it out. And my whole thing is just sort of taking a principle I learned from pizza, build the best you can possibly build, put the best things you can in there, build it the right way, do it thoughtfully. And if you do that, you're going to have a chance. Don't worry about this one who raised X or that one that did Y, because we'll raise those, we'll do that also. It's just, let's just be really intentional about what we're doing. So we're really excited about Ensemble Kitchen. And we have some other things coming out too. So, and then we're very active in the private side of the acquisition market also. We find that we're really a wonderful place for entrepreneurs and founders when they're seeking, strategic alternatives to their business. May not fit the nuances of the SPAC product because it's not $1 billion or $2 billion deal, but it's, a $50 million deal. And, in those cases, we could potentially look at those and be a great source of not only capital, but, a lot of other various things as well.
Well, I didn't realize you had acquired Kramer Books. That's one of the first places I ever visited in DC, and
Right?
I make a pilgrimage there every time I return. So
Next time we have to eat there.
glad to hear that.
Yeah, for sure.
Last question for you. What are you most excited about with Sizzle at this point?
Well, I think, what's been really cool about the process is, learning what it takes to be a publicly traded CEO. There's a lot that goes into that. And I grant you, like today, we don't have an operating business. We have an account, but a bunch of cash and looking to effectuate a deal. But the rigor of going public and the reporting process, and we're pretty rigid internally on the private side, but look, you're playing in the big leagues. You're dealing with big time stuff. You're dealing with various agencies. You're also dealing with a whole new slew of capital providers and access to all kinds of new things. When you think a lot of people, and you do, you realize how many people you don't know when you go down a process like this. And so I think what's been really exciting for me is, we have a great team, as I've said. I think we have a wonderful thesis. We have tremendous opportunities in front of us. We're very excited that we get to start going now and looking to find a deal. I think it's also been a fun journey just to date as far as, just going through the process of all this. And, I'm very proud of how we've been able to manage, again, I said earlier, we can't control the market. You only can control how you handle what's going on around the market. And, we got a lot smarter and a lot better while we hung out for about 6 months. We didn't rest on our laurels. We didn't just sit here and say, okay, we shelved our IPO and, when we're ready, we're just going to, flip the switch. No, we got better. We saw what people were doing. We saw what people weren't doing. We asked a lot of questions. We have been entrepreneurial through this entire process, and that won't change in light of what we're doing here. We continue to learn. We continue to be curious. These are things we adopt privately in our personal lives, professionally in our private companies, and now publicly as well. And, we hope and think and believe that, while we want to crawl first, then we'll walk, that this could be something that could be a wonderful, opportunity to not only effectuate transactions, but to build more relationships and to partner with wonderful companies that hopefully we can add value. At a minimum, taking them public and providing them with what they need to be great, and maybe at a maximum more than that.